Ladies and gentlemen, good day and welcome to Kirloskar Oil Engines Limited Q3 FY22 post-results call hosted by Antique Stock Broking. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Amit Shah from Antique Stock Broking. Thank you, and over to you, sir.
Thank you, Aman. Good evening, everyone. Welcome to the post-earnings Concall of Kirloskar Oil Engines Limited. Today from the management we have with us Ms. Gauri Kirloskar, Non-Executive Director, and Mr. Pawan Agarwal, CFO of the company. I'll hand over the call to Mr. Pawan Agarwal, who will give the opening remarks, post which we can open the floor for Q&A. Over to you, sir.
Thanks. A very good evening to all of you, and thank you very much for taking time and joining this call. Present with me on this call are Ms. Gauri Kirloskar, Non-Executive Director, and a few of my other colleagues, namely Mr. Rahul Prabhudesai, Head of Strategy and New Business Initiative, Mr. Arvind Chabra, Head of PPS Business Unit, and our Company Secretary, Ms. Smita Raichurkar. Mr. Amit Gupta, who leads the corporate finance function at our subsidiary Arka Fintech Limited, has also joined this call from Mumbai. I hope everyone is staying positive and testing COVID negative. As we all deal with yet another wave of the pandemic, let us hope that this will now transition into an endemic. Also, I would like to wish you all a very happy new year and filled with abundance of good health and prosperity. As you all are aware, Mr. Sanjeev Nimkar, the Managing Director, resigned from the company with effect from 27th January 2022 due to personal reasons. The board and the entire management team appreciates the contributions made by Sanjeev, and all of us wish him the very best for his future endeavors. While the company is in process of appointing a new professional managing director, upon request of the board, Ms. Gauri Kirloskar, Non-Executive Director of KOEL, has kindly agreed to supervise the day-to-day operations of the company in the interim, under the guidance of Mr. Atul Kirloskar and the board of directors of the company. The board has accordingly extended the term of Mr. Atul Kirloskar as executive chairman from 26 January till 31st March 2023 to aid in this transition. Today we are here to talk on the third quarter and the cumulative 9-month results for the financial year 2022. While the press release and the earnings call presentation which have been released has the performance details, nonetheless, I would like to go through the key parameters on financial and business performance of KOEL and its subsidiaries. But before that, a customary disclaimer. We wish to start by qualifying that during our call, we may make some forward-looking statements. These statements are considering the business environment we see as of today, and therefore, there could be risks and uncertainties that could cause actual results to vary materially from what we are discussing on the call, and we would not always be able to update on these forward-looking statements. Now coming to the performance, as an overall picture, if you see, we have taken a hit on our profitability for this quarter. However, this needs to be viewed in the context of last year numbers, which had lower levels of costs due to a variety of cost savings on the backdrop of COVID-19. To give you some examples, restricted movement of our people, significantly lower costs for communication and negligible sales and marketing spend, etc. The other development to touch upon is the overall inflationary environment. The quarter was marked by an increase in prices of raw materials as being witnessed across many industries. The company took necessary price hikes in this quarter as well to mitigate some of the impact of input cost pressures. The compounded impact of all these price increases still could not help us recoup the steep increase in input prices fully. We had informed you in our last financial year's quarter 3 earning calls that KOEL had embarked upon a cost optimization exercise, and we were able to implement quite a few cost control measures. The impact of those were flowing through into almost entire FY 2021. However, as we have scaled back to normal levels in FY22, many of these costs have got course corrected in line with the normal scale of business operations. Understandably, therefore, the maintenance of low operating year level is very difficult and, as reported earlier, not sustainable. Coming to the revenue side, power generation business delivered 25% growth year-on-year basis, and our exports saw a healthy growth of 60% in quarter 3. Extended rains and floods in few pockets, especially in the north, south, and eastern region of the country, hindered electric and submersible pump business growth in quarter 3. The other details of the sales are captured in the presentation uploaded on the website. Now let's look at our results. On a standalone basis, the total revenue from operations for the third quarter stood close to 837 crore against 798 crore in quarter 3 of the previous financial year. As mentioned earlier, the general selling and administrative expenses in the current quarter were higher as comparable period in the last year was largely affected by COVID, and hence the costs were not at normal levels. EBITDA for the quarter was nearly 51 crore as compared to 94 crore in the same period last financial year. The company delivered PAT of approximately 25 crore in quarter 3 versus nearly 61 crore during the same period in previous financial year. During the 9-month period ended 31st December 2021, revenue from operations grew by almost 30% to rupees 2,310 crore, but EBITDA remained at a level of 166 crore due to lower gross profit, higher employee cost and other expenses compared to same period last year. The current year's other expenses also include a one-time expenditure incurred by the company towards the Kirloskar brand refresh program. Consequently, profit after tax for the 9-month period ended 31st December 2021 was approximately 9% lower at 88.5 crore. Most of the business divisions have demonstrated double-digit sales growth in the current year so far. As at the end of December 2021, overall net working capital was maintained at a healthy level of 13 days. Moving on to our subsidiaries, following are some of the key highlights. At Large Machinery Private Limited, which is LGM standalone, revenue from operations grew from 129 crore to 134 crore in quarter 3 on a YOY basis. Other than government supplies and OEMs, the other business segments such as retail and exports witnessed sales growth during quarter 3. For the 9-month period ended 31st December 2021, revenue from operations grew by nearly 13% to 410 crore. The steep increase in commodity input costs impacted the margins at LGM during the year. Our newly formed step-down subsidiary Optica Pipes and Electricals Private Limited started its commercial operations in May 2021 and for the period ended 31st December 2021 delivered revenue from operations of rupees 25 crore. At Optica, we expect to exit the current financial year with a turnover of approximately 40 crore. As informed in the previous earning call, Optica entered into a joint venture with Iswa Pumps India Private Limited by making an equity investment of 4.41 crore, thereby obtaining 49% stake in the company on 4th October 2021. Iswa Pumps delivered revenue from operations of approximately 25 crore during the period ended 31st December 2021. Kirloskar Americas Corporation, our US-based subsidiary, saw an impact on its revenue in quarter 3 due to surge of COVID in the Americas region and supply chain and logistic issues. KAC delivered a revenue from operations of rupees 21 crore in the 9-month period ended 31st December 2021 compared to approximately 20 crore revenue in the same period last financial year. The key highlights of the financial performance of Arca Fincap Limited can be seen in quarter 3 earning call presentation uploaded on the website of the company. As far as consolidated performance of KOEL Group is concerned, here are the key points. Revenue from operations grew at 29% year-on-year at rupees 2,840 crore for the period ended 31st December 2021. EBITDA stood at 269 crore against 240 crore for the 9-month period ended 31st December, registering a growth of 12% year-on-year. Profit after tax for the 9-month period ended 31st December 21, however, was at 103 crore, a 14% decline year-on-year. The Board of Directors has approved an interim dividend of rupees 1.5 per share, which is 75% on the face value of equity share of rupees 2 each. As far as outlook of KOEL standalone is concerned, we are focusing on exiting FY22 with a top line growth of at least 18 to 20% year-on-year basis. As the commodity prices have been on the rise for past many months and impacted the margins, the company has taken a decision to further hike prices in quarter 4 of FY2022 to offset the impact of input cost increase to some extent. However, it would be difficult to pass on the entire input cost increase onto the customers, and therefore, despite our best efforts, we anticipate some impact on EBITDA margin in FY22 versus FY21. It would, however, be difficult to quantify the exact impact on EBITDA margin at this point of time. As we are done with the number updates, I would like to update you all on KOEL's sustainability journey. As a group and also as company, brand Kirloskar is very well known for our community partnerships and environmental friendly operations. Our manufacturing plant at Kagali is already carbon neutral. At KOEL, we are focused on all the elements of ESG framework. From the coming quarters, we will update you more on sustainability journey and our company level efforts. Our goal is to be best in class in this area. To conclude, I would like to mention that overall the internal and external factors today are challenging for KOEL, but we remain enthusiastic and optimistic about opportunity. The efforts of the last many quarters in multiple areas such as new product development, productivity gains, strengthening and deeper penetration of our brand, channel expansion, etc., coupled with favorable economic environment provide us a great opportunity to scale up the business and enhance the key business and financial performance indicators going forward. We are hopeful of a much stronger financial year 2023 as we get closer to exiting the current financial year. We believe we are well poised for the better future. We have the financial resources in terms of a strong balance sheet and a healthy cash position, a great set of products, powerful brand, and an experienced team to capitalize on these opportunities. We continue to evaluate inorganic growth opportunities, and as plans turn more concrete, it will be presented to the board and also to the investor community. Now, I would request Gauri to share her thoughts with all of us, and thanks from my side. Over to you.
Thanks. Good evening, and thank you for participating in this session. This is Gauri Kirloskar. This is my first session with you as the Director supervising daily operations of Kirloskar Oil Engines, and I look forward to our interactions on a go-forward basis. First of all, I want to put on record that I'm here in the interim to supervise the day-to-day operations of the company. Our intent as promoters is that all of our companies must be professionally managed, and that is one of my key priorities, to identify under the guidance and consultation of the board a suitable professional who can be appointed as the managing director of KOEL. I shall continue to be engaged on a day-to-day basis till such a transition is completed. Separately, you may have read the disclosures made by KOEL yesterday. My cousin Nihal and his family have expressed their desire to pursue their own independent interests, and accordingly, Nihal has resigned from the board of the KOEL group of companies and expressed his and his family's intent of eventually exiting as shareholders over a period of time. The board of directors have accepted and taken on record his resignation letter as well as the letter issued by him along with his mother and brother. As my uncle Rahul Kirloskar and my father Atul Kirloskar, our chairman, have mentioned in their press release, this is a very amicable development. We, as the fifth generation of the Kirloskar family, have always been encouraged to follow our passion, and that is what he is doing. After his father passed away, he has and continues to look up to my father and uncle as his father figures, and they treat him as one of their own children. That relationship continues, and we have a nice bond between us cousins as well. They are working out the modalities of their exit as shareholders from the companies according to law and applicable regulations. In the meantime, my role here is to serve as a custodian of the wealth of all of our stakeholders, and I assure you that I will do my best during this transition period and to get the right professionals in place. Thank you. We are now ready for questions.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question, they may please press star and 1. First question is from the line of Sandeep Tulsian from JM Financial. Please go ahead.
Yeah, very good evening. My first question is pertaining to the disclosure or the letter sent out by Mr. Nihal Kulkarni.
Request you to please unmute your line and proceed.
Yeah, hi. Are you able to hear me?
Yeah.
Okay. My first question is pertaining to the letter sent out by Mr. Nihal Kulkarni last evening. So to exit the entire shareholding that is held by him and his entire family, which constitutes a large part of Kirloskar Oil's overall shareholding, as well as of the holding company Kirloskar Industries. So would there be an intent by the promoters to buy out some percentage of this shareholding? Number one, and is there a timeline put towards the sale of those shares?
Okay, this has just been mentioned yesterday, so it is too early to comment on who will buy the shares. I'm sure we all know that as insiders, they have to comply with the regulations and would for a certain period not be in a position to sell the shares. As mentioned in their letter, they have indicated that they will be willing to sell their shares in one or more tranches over a period of time, the modalities of which are going to be worked out by them. Does that answer your question?
Got it. No, that fairly answers, given the constraints what are there around the disclosures. Second question is pertaining to the electric pumps and tillers business. It was mentioned that some of the ramp-up has been made in Optica pipes and the newly acquired ESVA pumps JV. So if we exclude these two entities, what has the base business grown by? And given the losses which we are doing currently, what should be the break-even levels in these two businesses we should be looking at?
So if I understood your question, Sandeep, you are talking about LGM standalone number as far as the pump business is concerned. Is that correct?
Yes. So, Mr. Agar, I'm talking about the segmental electric pumps that is reported as 173 crores in the quarter, which has grown 3% year on year. So out of the 173, how much is new business, which is not there in the base, that is Optica and ESVA? And for this 173, at what level we should break even in this business, and what is the road to profitability going forward?
So Optica, I will address your second question first. So Optica has a fairly low break even. So most likely by the end of this year, we would be breaking even about 5 to 6 crore of 5 crore of sale per month is what is needed. And ISWA anyway is a JV where we are already making profit. So it's a profitable business. Now coming to the first question, so ISWA did a sale of about 24 crores. Just a moment. Yeah, ISWA did about 24 crores, which is basically to Coil and LGM, almost equal. And Optica has done a sale of about 20. Optica standalone is about again 24 crores. Out of this, roughly 50% is to external customers. About 12 crore of Optica is to internal. So 24 if you remove from LGM, 12 crore of Optica and 12 crore of ISWA sales to Coil and ISWA sales to LGM. So all put together about 36 crore will be, 24 crore will be intra-group sales in pump.
And what would be the break-even for pumps if I exclude, say, this 24 crores from this 174 crores broadly? That 150 crore, at what level should we start breaking even?
LGM was delivering profit. As you know, it was contributing about 6-7% EBITDA. But for the last couple of quarters, because of input cost increases, and there was a in passing on the input cost increase to the market, which has led to the deterioration in margin. Actually, it has slipped into losses. However, a number of steps have already been taken, and we are also taking price increases in LGM. As we speak, in December, we have already taken a price increase of about 2.5% in LGM, and we are about to take another price increase in the current month. So our endeavor is that we bring LGM into profitable territory in this quarter itself. But this is based on the commodity price situation as we see today. Going forward, depending upon how commodity prices behave, we will take additional measures. But to answer your specific question, we are taking all the steps to bring back LGM into profitable trajectory from this quarter itself.
Got it. And one last question, if I may, is pertaining to the new business plans. We've highlighted 3-4 major areas. One of them being the motors and the transformers on the electrical side, and second one is this pipes and cables, and third one is on the organic waste opportunity that we were wanting to capitalize on. So if you can highlight what is the timelines when these business segments should start contributing materially to revenue. If you can independently in each of these business segments highlight what kind of investments would be required. and any other changes in plans in whatever the segments that I have mentioned. That's my last question.
I'll answer the last point first. There is no change in the strategy of the company. It is as what we have announced to the investing community in the earlier quarters. As far as wires, cables and pipes business, which is Optica right now, it is a very, very asset-light business. There are no major capex requirement over there. And we have significant runway available to scale it up to about 120 crore rupees with absolutely negligible capital expenditure. So there it is taken care of. Here pipes we are talking about column pipes. We are looking at column pipes only. And motors we have taken some tiny steps in LGM, but still a lot of work needs to be done, which Rahul will speak in more granular details. And in Coil, our plans are afoot to launch Coil branded motors very soon, maybe in this quarter or early next quarter. And what else? OWC, yeah. So you can answer out.
On electric motors, we should soon expect the product launch maybe this quarter, as Pawan said, maybe early next quarter. All the preparations with respect to the team building and dealers, etc., is currently ongoing. So we expect it to be launched very soon. And it should contribute a decent amount in the next financial year. On OWC, it is already into the market, and in the next year we have again planned to contribute about 10-15 crores in that business. On the allied, Pawan already spoke. That is the cables, wires, and pipes. So that's the current status.
And on the electric transformers for railways that we were planning to do?
So railways transformers, as we have earlier said, it's a tender-based business. Because of COVID, the tender flow from railways has been a little bit inconsistent. As soon as the tender flow normalizes, we will try and bid for those tenders. So this is tender-based, so we can't really say how much we'll be able to do. If the flow normalizes, we should be able to get in. But we are ready in terms of our back-end preparation in participating in that business.
Got it. Thank you. Thank you so much. That's it from my side.
Thank you. Our next question is from the line of Bhavin Vithlani from SBI Mutual Fund. Please go ahead.
Thank you for the opportunity. The question is on the exits of the top management. So there was a press release on the CEO exit, but there was a news report that along with him, the couple of other heads of the business, namely water management and after sales, have also resigned. Could you confirm this? Second, if you could also help us with the reason for such abrupt exit. Normally we see that there is a 3 to 6 month gardening of CEOs, and this kind of abrupt exit is rarely seen, and complete top management along with CEO going away is very worrisome. So can you help us with the reason? What are your plans? How do you, what time frame do we see a professional CEO as you highlighted, and a kind of little disturbing to see sudden management exits and then promoter exits. If you could just throw more light, it will be really reassuring.
So the exit was for personal reasons, as the resignation letters that have been filed with the stock exchanges mentioned. And as I mentioned before, we are currently already looking for a professional MD. I'd say the timeline is about 6 months.
So could you confirm about the head of water management and the head of after sales also resigning along with the CEO?
Hi, Bhavin. Good evening. This is Arvind. When you are mentioning to the head of service, I think this particular stuff was already in pipeline for more than a year because of his personal aspiration, and it was a proper, informed, and in fact, the head of service is already onboarded, and it's a homegrown talent, wherein this guy personally was involved in terms of creating a backup, and he gave us the due course of time because he wanted to enter into his personal venture. And if you know, he has not joined anywhere. He actually has an aspiration for a very long to pursue his own business. And the business was also like what he wanted to do was he wanted to just share his knowledge base with the young generation, what he has gained over the time in professional career. So it was well planned and well supported, and with the mutual respect of both sides, like the employee side as well as the organization side. And head of CS is already on board, which is a homegrown talent.
And the water management head?
The water management head business was sudden, and we will be looking for his replacement.
So, sure. So how do you plan to steady the ship with complete? If you could just give a bit more, how are you planning? Because it's a very disturbing thing where the entire CEO and the top management exit at the same point in time.
Sorry, so we have a strong second in line in all of our businesses, in all of our business units, even where we have strong leaders. So there's the second in line now. Today is reporting, up into the business unit head and into me. So that's how we're managing it.
Sure. Okay, fine. Thank you for taking my questions.
Thank you. Our next question is from Kiran Sebastian from Franklin Templeton. Please go ahead.
Yeah, hi. Thanks for the opportunity. Two questions from me.
Yeah.
Environment, especially for the power gen business.
Kiran, you lost
to touch upon the trends in. Hello, can you hear me?
Yes.
You are not clear. Can you speak up, please?
Yeah, it would be helpful if you could touch upon the demand environment, especially for the power gen and residential real estate and markets. And my second question is there a hard stop for the equity investment into ARCA? Are you going to stop funding after 1,000 crore, or is it open at this point?
Kiran, very good evening, and thanks for joining the call. This is Arvind. I would just answer your first question, and then I will request my colleague Pawan to address your second question. But before I try and address your question, I would just like to take this opportunity to give an overall overview of the situation, which probably would address most of the questions as well as your questions also. So if I have to just look at the Q3 DG market, the DG market expected to report almost 14% growth year on year, which is a very positive sign. Though sequentially, the Q3 has a degrowth of almost 200 basis points, which we can discount primarily on account of because Q2 had a pent-up demand coming in from Q1. So hence the Q2 base was slightly strong. But if you look in isolation, Q3 has shown a very positive sign. And when we look at the further outlook, in all possibility, FY22 overall market is expected to reach the pre-COVID level, which means like FY19, FY20 kind of stuff. And most of this growth is being fueled from the healthcare sector and well supported by the recovery of infra segment. While we were continuing to dominating position as far as the healthcare is concerned, and just to share one perspective, that Q3 was a time when we could install 1,000 plus mark in terms of the pure healthcare infrastructure like O2 specific oxygen plant across the country, and this order board is growing very healthy, and it is well spread across the country. It is not limited to a specific geography and all. And we could manage our Q3 numbers while there was a 2% sequential degrowth vis-a-vis the Q2, which I mentioned. And this was majority coming from the medium and high horsepower segment, which is 40 kVA to up till like 625 kVA. Though in the Q3 itself, commodity continues to stay towards the upward. We may talk about the pig iron, aluminum, or even the related commodity. There was an increase. And if you all remember in the Q2, July, we increased the price, and we were all hopeful that it would benefit into the Q3, but unfortunately, it looks to be a catching up game for the commodity, because the RM-led inflation of the quarter itself was not enough to cover the quarter 3. And as Pawan already mentioned, that during the quarter 3 mid itself, we again took the leadership position to come forward, and we went ahead with another price increase. Though it was a very risky call, looking at the once the market was showing forward-looking growth, but then still you always reach to a point when you stop thinking of the volume. And we were very confident that the others would also support and follow, and we can come back to normal, and which happened. I mean, immediately after price increase in the mid of quarter, it was followed by others also, and market has now normalized those prices. So that's the overall. Now, your specific question was towards which sector has fueled the growth. I think I covered it in my answer, though I'll just repeat it. It was well supported by the healthcare infrastructure, and if you all remember, in the early quarter 3, the anticipation of the pandemic put all the hospital oxygen plant on the fast track, and we could capitalize on that opportunity to a large extent. Now I'll just request Pawan to answer your second question.
Yeah, Kiran. This is Pawan Agrawal. As we have mentioned in earlier calls also, that the board of COEL has confirmed an investment of a maximum of 1,000 crore as of now, and this is a calibrated approach that we have adopted. And we are the board of COEL is closely monitoring the performance of ARCA, and depending upon the performance, growth, profitability, and various other factors, the amount has been put in. So as of now, it is restricted to 1,000 crore.
Thank you. Thanks, both of you.
Thank you.
Thank you. A reminder to our participants, please press star and 1 if you wish to ask a question. We have our next question from Amit Shah from Antique. Please go ahead.
Yeah, sir. One question from my side with regards to the incremental price hikes that we are planning to take, given that the cross margin compression is still happening on the quarterly basis. So what sort of price hikes we are planning to take in the further quarters? And secondly, even on the agri business portfolio, if you can just highlight how the business is shaping up over there. So these are my two questions. Thank you.
So on the agri side, we have taken in COEL, I'll first talk about COEL. So in COEL, on electric pump side, from April till now, we have taken 4 price increases, about close to 18 to 20% in total in this period. As far as the diesel engine part is concerned, there also we have taken 3 price increases from July to February 22, which is close to about 10% in diesel engine. Additionally, in diesel engine, we also sell spares and alternators. There also we have taken price increase to 3 times during the year. On LGM side, just to let you know, in the last 12 months, which is from November, December last year to now, there has been continuous increases in the input cost, and we have taken close to 13 to 14% in total price increase in LGM business, which is basically electric pump. And roughly 4-5 times we have taken actually increase, and 1 price increase we have taken from the beginning of this month, and we are closely monitoring the input prices. In case they go in the same direction, then we would not hesitate to take further price increases in order to bring back the profitability. So this was on the price rise issue on water management. Arvind has already talked about the price rise matter in case of PPS business. In farm mechanization, where we deal with tillers and weeders, there also we have taken, if I see last January 2021 to now, January 2022, there have been 4 times we have taken price increase. But of course, power tiller, as you know, is the cost increases are capped because it's a subsidy-led business. So we have taken price increases in case of retail market, in tiller as well as in weeder. In our customer support business, there also in spares and tractor part oil, there have been 2-3 times we have taken price increases in the over last 9-10 months. In industrial business also, we have taken price increases with our OEM customers, most of the OEM customers, in fact all of the OEM customers in the last 9-10 months. So there has been price increase decisions across businesses. However, there are time lags in some cases, and also the gap between the input cost increase versus the price increase which has been passed on to the market. There has been some delta which has impacted the margins, but we take cognizance of the profitability of the company very seriously, and whatever actions are required to be taken will be taken very quickly, and it will be moving in line with the input cost increases going forward.
Yeah, sir. Thank you so much. Sir, on the demand side, if you can highlight, with this kind of price increases, have we seen demand tapering off, or demand continues to remain intact despite the price increases? So how the demand is panning out both in the power gen and the farm mechanization side of the business? So post this price increase, do we see any demand tapering off?
Yeah, so I'll answer the water management side, and then probably Arvind can answer the PPS side. On the water management side, we are definitely seeing some slowdown in the industry. It has got nothing to do with the price increases that we are taking, and hence, there is an impact on our sales. That is not the case. But generally, agri, sector as such is seeing some slowdown, and the others are also seeing this slowdown. Other players in the segment also seeing this impact. Also, as I mentioned in my opening remarks, during this year, extended rains and floods in certain parts of the country has also impacted the demand situation. But as of now, February, March onwards, the season starts, so we are all geared up for that, and the green shoots are visible. So we are hoping that February and March onwards, there will be strong recovery in demand.
And if I have to just add for the PPS business, in the domestic EV market, price increase as we did towards the mid of the last quarter, which has already settled, and good news is that most of the order board is with the new price. There is no impact in terms of the demand coming down, but only thing is there is sometimes shift between you taking the lead and somebody just following you. So there is some bit of business shift, but otherwise there is no impact as far as the demand is concerned. And as I mentioned in my summary also, that overall market looks to be very positive, and in all probability FY22 would reach to the pre-COVID level. Though in industrial, demand is led by other factors, not the price, because our price increase is not like in absolute equal percentage to the FG, because there's a lot which goes into the final goods of those OEMs.
Sure, sir. This is really helpful. Thank you. That's it from my side.
Thank you. Our next question is from Ashwani Sharma from Anand Rathi. Please go ahead.
Yeah, thanks for the opportunity. So my first question is on the market share. If you can please help me with the market share on the LHP, MHP, and HHP, and how it has changed in the last over the last 1 quarter.
During my commentary also, I said that Q3, though there was a sequential degrowth from the Q2, but we at KOEL, we maintained our number, and it was primarily supported by the medium and high horsepower in the range of 40 kVA to 625 kVA. And if I have to speak about the specific segment, because this is the segment, this is the node which specially addressed to the healthcare and the infra. And that's where the maximum growth was coming, and we were the one who were leading this growth. If I have to speak about the overall market, the final numbers are yet to be out, but from the flash, it looks like that market has grown over the last year, and we have been participating as a leader in that growth. But the further details, like who lost it, who gained it, we'll have to probably wait for some more time by the time the final details comes in.
Okay, and also on the farm mechanization side, I mean the tillers and the weeders, how's our market share over there?
Can you repeat your question, please?
Yeah, similar question on the farm mechanization side. I mean, tillers and the weeders. How's our market share over there, sir?
No, so in tillers, the overall industry size is also very limited. Some 55,000 tillers is the market size, and as we all know, VST is the market leader. We are between number 2 and number 3, so about 14 to 16%. Weeder is a smaller market but a better margin space, and we have a complete range of products available to cater to the demands in this segment, and our weeder offerings are showing very good traction in the market. And it's a small segment, but we have just made tiny steps in this direction, and we are expected to consolidate our position in this particular segment.
Yeah, thank you. My second question is on the large engines. I think this segment, obviously it is a small segment, but then I've been noticing that over the last 4-5 quarters there has been degrowth. So if you can tell us that what is really happening there, and what is the outlook that we see?
Okay, so in large engine business, as you are aware, we deal with a lot of government customers, PSUs and Government of India. And also there is a other segment where we basically marine and defense. This is where we deal with, and then we have a spares and service business also. Over the last probably 4 to 6 quarters, as you actually noticed, there has been some slowdown in terms of decision making or allowing us to execute the order. And while we have a very healthy order board, about upwards of 150 crore as we speak, but the execution of these projects are not happening because of the delays from the government side, some of our customers. Now it is opening up. Q4 is looking much more brighter, and we are quite hopeful this order book of 150 crore, a large part of that order book will get executed in the next financial year. And as we all know, it's a decent margin business, so that gives extra support to the overall profitability of the company.
Okay, sir. Thank you very much. Thanks for the opportunity.
Thank you. Our next question is from Sandeep Tulsian from JM Financial. Please go ahead.
Yeah, just one follow-up I had on the industrial segment. When we look at the industrial segment sales, on a year-on-year basis, they have declined despite all the price hikes that you spoke about that has been rolled out. So if you could break it up between, the construction equipment and the tractors, how each of these parts have done, and what is the outlook going forward?
Yeah, sure, Sandeep. In fact, good you brought up this question because I missed it in my brief. If you would have noticed the industry from an FG perspective, the earth moving and the tractor industry has shown a slowdown in the Q3, where in the construction side of the equipment stayed positive. And we being very strong in construction equipment side, hence our impact was minimized to the range of 5%. But if you look at the overall construction equipment or off-highway industry, probably there the impact is much higher. So we would say that from our perspective, it was very, very positive. But just to answer your question and add to your question, whatever degrowth we have seen is primarily from the tractor and the earth moving side.
Can we share some numbers, please?
So you're looking for a specific sale number in the segment-wide?
Yes, sir. I have to break up this 173 odd crore sales between construction and tractors. How much would that split be, and what is the growth rate in each of these sub-segments?
Okay. In tractor, we degrew by 39% year on year, and quarter on quarter also more or less similar degrowth. Okay. Now, on other than tractor, which is construction equipment, off-highway, etc., there we saw a growth of 7% for Q3 year on year, and Q3 quarter on quarter sequentially we grew by 27%.
Got it. Thank you so much.
Thanks.
And the other factor that was impacting it was, we all know the semiconductor issue, and this all is fueled by the BS4, the non-tractor. So that was also one of the factor in terms of the availability.
This is for your off-highway equipment, is it?
Off-highway equipment.
Got it. Thank you.
Thank you.